I want you to imagine your ideal retirement. Traveling to amazing countries, tranquil places that quiet your mind, relaxing under the sun on a perfect beach, cruising to exotic locations. Maybe it's just more time with the people that matter most of all. You're working hard, you're running your business. Oh, one wrong decision can set you back. There are so many decisions that are critical to your success, the challenges of growing your business, opening new markets, and executing your business plan. You need an expert who can simplify complex problems with straightforward solutions. What I'm about to share with you today is something you may have heard before but never actually experienced, because advisors have been trained to sell you products and services. Everyone says, I already have an advisor. So why is the number one financial concern, do I have enough money to retire? A quick Google search reveals over 49 million people are asking the same question. I often say to people, sometimes you just outgrow your advisor. As your financial needs change, you might need to change your advisor to an advisor with specialized knowledge experienced in managing complex business challenges. Let me ask you a few questions. Does your current advisor uncover additional deductions for your business, discuss personal versus corporate investments and which might be better for you, develop a tax-free income stream, or have a discussion around protecting your lifetime capital gains exemption? A lot of advisors are like catchers at a baseball game waiting for that pitch to come. In this case, they're waiting for you to hand the money so that they can invest. Well, wouldn't it be better if you work with a business owner or advisor? I position myself completely different. I'll help you improve your cash flow so you can have more money to invest. Whether you put that towards your business or towards your personal goals, you decide. Over the next few minutes, I'm going to share with you a few areas where a business owner specialist can achieve a massive difference in your business and personal goals. Here's what you're going to learn today. Investing inside or outside of your corporation, and which might be better for you, the lifetime capital gains exemption, and why you might actually be ineligible to using almost $900,000, how to fund your retirement using your corporation, and developing a CRA tax shield. This is tax-free income coming from your corporation. And how you can begin to implement these financial planning processes in your business starting today. Now let's talk about the BOS process. I love taking my clients through this process because it actually creates clarity almost right away. Your business goals are very in depth. You have a need for capital for your ongoing business operations, and then also for future growth and opportunities. But you have this competing agenda with your personal needs, and that's your lifestyle needs, retirement planning, legacy issues. Both of these areas are constantly competing. They need the same thing, the money from your corporation. And the dilemma is, how do I, as a business owner, use my money more efficiently to grow my business and to grow the other side of the equation as well? It's not an easy thing. And so I actually lead my clients through this. It looks busy, but you know what? There's so much that I do to help a business owner beyond just what's your rate of return. We go into things like growing your business, cash management, getting you in front of the right legal and accounting teams, business development, employee retention, talking about preserving your assets, protecting your assets, and then how do you accumulate more assets? These things, personal and business, they are linked together, and I share with you a strategy on how to actually use your money more effectively. Now let's talk about that first of the four areas: personal investments versus corporate investments, and which might be better for you. A simple illustration here shares kind of how that works. If you were to take about $18,000 and invest it today and let it grow over 30 years, don't worry about why I'm saying $18,000. There's actually a specific reason, but we won't get into that today. But let's say you take $18,000 and you invest that in a mutual fund in your corporation and you don't touch it. Leave it alone for 30 years. Don't add to it. Don't withdraw from it. It's going to grow to about $74,000. So obviously that would be the highest value on this illustration. The next best place is going to be an RSP. Here's the thing though. As a business owner, you're constantly looking for opportunities to grow your business, to use your money more effectively. And so if you saw an opportunity where you could take your cash in that investment and deploy it to, let's say, another business opportunity. You're going to do that. And so in that case, you're not actually going to leave it long term and let it accumulate, compound on itself. So that first example of deferred capital gains is really not a solution for you. The RSP is going to be the next best place. But here's the problem using an RSP. To use the maximum contribution in RSP, you'd have to have a salary in excess of $161,000, and you have to ask yourself a question: what's the impact to your business in taking a large salary versus retaining the cash in your business? The other areas you have to worry about is now you've got payroll taxes, Canada Pension Plan premiums, and employment insurance premiums because of the salary. You also have to consider the lifetime capital gains exemption. If you choose to invest money in your corporation, that could set you offside for using your lifetime capital gains exemption. And you also want to think about splitting income with family members. And finally, the small business deduction may be limited if over $50,000 of passive income is earned in your corporation. These are all areas you have to worry about. Passive income tax in Canada is over 50%. It's crushing your ability to grow the money in your corporation. It's actually a disincentive for you to keep your money in your corporation. What do you do about it? Well, a lot of business owners try to use corporate structure to help themselves out, but sometimes the way you're actually investing in your corporations might make you ineligible to use that lifetime capital gains exemption. Let's show you what this means. That blue area, just about every corporation, every business owner has the operating company. That's that blue area. And you're doing well, and everybody tells you should push some of that money to protect it up into a holding company. And you do that because you were given that advice. But what happens is that cash is growing. Problem is that it's called an anti-stacking rule. 90% of your assets must be actively used in your business, and 50% for 2 years prior to the disposition or sale of your business. You'll notice that $500,000 is more than the 10%, right? And so that makes this situation where you're ineligible to use your lifetime capital gains exemption. And most business owners have no idea that they're in trouble like this. Let's take it one step further. Same corporate structure, we're just going to add 2 more corporations, okay? You're doing well in your business. You know, like many Canadians, you go to vacation in Florida, for instance, and you like the property, decide, you know what, I'm going to buy a vacation property in Florida. That's that red roof building with the palm tree. You might even have a cottage in Canada and various investments. But let's say you put that into, we'll call it a U.S. corporation. You're also doing very well, and you say, I'm going to be a real estate investor. I'm going to buy whatever kind of real estate. The problem here is having active and non-active real estate in a corporation. That's commingling of those assets. That also makes you ineligible to use your lifetime capital gains exemption. Having surplus cash, personal use real estate, passive investments, life insurance cash values, all commingled is a big problem for you as a business owner and makes you ineligible to use almost $900,000 that we're trying to protect here. And so this is some of the areas that I go into with business owners. It's not just about your rate of return. Now, your business is doing really well. The money is growing in your corporation, but that is the rub. That's the problem. That surplus cash is creating the possibility of you being ineligible to use your lifetime capital gains exemption. So one of the areas that you could do is you have a corporately held life insurance policy. Push some of that money annually over from your corporation into the life insurance. That reduces the surplus cash in your business. And then you have that cash growing in a life insurance policy, tax-free growth, and it's available for any time that you need it. Now, what I'm going to share with you right now, you cannot get at a bank because banks are prohibited by law to sell life insurance out of their branches. Now, this strategy might be the best option for you, but if you're using someone at the bank, you may never hear about it because they can't talk about it. They may not be licensed to talk about it. So let's explore this real quickly. We're going to compare a traditional investment like a mutual fund compared to life insurance. And you might be asking yourself, what are you talking about? I'm not familiar with investing in life insurance, or maybe it's something you just didn't know you could do. But your mind is going to be blown here, and I'm going to apologize up front because most people, when I share this with them, they can't believe it and they don't know why they haven't been shown this before. Okay, I'm just going to gray out that life insurance section so I can focus your attention on the mutual fund. Simple here. I know it looks busy. It's simple. Take $1,000 a month for 20 years, invested in the mutual fund. It grows over time, and that's where that $240,000 of cumulative deposits comes from. That grows over time, and then you say, you know what? In my retirement, I'd like to use the the maximum, so withdrawal, the maximum amount every year over, let's say, a 15-year period. You do that, it comes to about $490,000 that you use and enjoy this money any way you like. Then you pass away at a ripe old age, and in this example, $0 available for your beneficiaries. Okay, let's flip to the life insurance. Same amount of money, $1,000 a month over 20 years, but the difference here is the cash inside of a life insurance policy grows tax-free. So it actually grows higher. You have more money to use during that 15-year period, right? So the maximum withdrawal over a 15-year period would be almost $550,000. Same scenario, die at the same age as the mutual fund example, but in this case, it's life insurance, and you get almost $1.3 million in this example given to your beneficiaries tax-free. So use more money throughout your retirement and pass on $1.3 million to your beneficiaries. People, when I show this at all the seminars I've ever done, people in the audience they just can't believe this exists. They think there's trickery involved. There's no trickery. This is life insurance. But given your choice here, if you qualify to use life insurance, you might want to use life insurance versus a traditional investment. But these are some of the things I go through with clients to try to understand the most beneficial way for you to use your money. I'll get people to tell me, I don't like RSPs. And that's okay. Maybe as a business owner, using an RSP isn't the best thing for you. But what would be a better alternative? Well, how about an investment that provides a tax deduction for your business and doesn't disqualify you from using your lifetime capital gains exemption? Well, that's called an individual pension plan. Let's run through it quick. What are the differences between both? So an individual pension plan, higher retirement incomes as compared to an RSP. Tax deferred growth, same as an RSP. Deductions are for your business, and the deductions are for you personally in an RSP. You can put more money into an IPP, individual pension plan, as compared to an RSP, right? Because it's based off 18% of your earned income. And as a business owner, you're controlling your income because you don't want to pay so much income tax. And that actually limits the amount of money that you can put into an RSP. So that makes that equation so much harder for you. So it might be better for you if you qualify to have your company fund your retirement. You get to reclaim the last 3 years of your taxes in your individual pension plan. And with an RSP, there's no reclaiming of taxes. The fees and costs are all tax deductible to your business to have an individual pension plan. Of course, those fees are not tax deductible in an RSP. Now, the funding liability for an individual pension plan, well, think of government employees where the employer is paying for their pension plan, right? Well, you are your own employer, so you have to fund the pension plan. And in RSP, you can stop and start, you can vary the deposit amounts, so there's really no funding liability. Well, this might be a good time to introduce myself. My name is David Aaron, and for over 20 years of experience helping business owners achieving their financial goals while protecting and growing their assets. Don't take my word for it. Here's a few kind reviews that my clients have given me over the years. Now, does your advisor specialize in a specific area, or do they work with anyone? You know, as a business owner specialist, I help you put the pieces of that puzzle together. As a business owner, you have a lot of moving parts. There's your business and your personal side. Some of those pieces don't fit easily together, but that's the whole point of working with a specialist over a generalist is I find clarity for all the answers that you have, so you have less anxiety around financial planning, for instance. Let's look at some client success stories. We had a business owner who was selling their business, was going to experience a $600,000 tax bill. We managed to totally eliminate the $600,000 bill, putting that money back in his pocket for retirement. Now, how would you like to have an extra $600,000 to use in retirement? You know, this couple came to us where they had this aching feeling that they just didn't have enough money to retire, and they didn't really know how to talk with their advisor because, you know, the advisor was a nice person, very pleasant. You know, it's a difficult conversation to say, I don't really think we're getting the right advice. Sure enough, when I sat down and talked to them, we quickly discovered that they were going to run out of money in retirement. That's that red area on the chart there. And so we put a plan together and changed a few things around, and now they have a fully funded retirement. The changes were not that significant. They weren't complicated to do. They just needed clarity around what would be a strategy that they could follow, simple, straightforward strategy that would allow them to have a fully funded retirement. As a business owner, you have so many responsibilities, not just running a successful business, but you're also responsible for the employees that work for you. You're giving them money that puts money on the table, that feeds other families. Such a tremendous responsibility, and you're working so hard. And then on top of that, you have anxiety about whether you're going to have enough money to retire. You just don't deserve that kind of planning and advice. You really need somebody who's going to be able to make it clear for you about what to do, so you have confidence in that side of your equation, so you can focus all of your attention on your business. Well, it all begins with a financial plan. 2 out of 10 people have a written financial plan. That might lend some evidence as to why there's over 49 million results on Google of people asking, will I have enough money to retire? Financial plan goes into cash flow and financial assets. We have sophisticated software to help you out. But that financial plan is pretty intimidating, 20 pages deep. And so I make it very easy for my clients to understand in under a minute what their situation is. I take the most important parts of a financial plan and put it together on a financial dashboard, 1-page document, which I email to you anytime you like, because I'm updating it all the time. And inside of 1 minute, you take a glance at it, you know exactly where you are. Some of the key elements here on the right-hand side, top-hand corner, what's your portfolio return? It's nice to brag about what your return is, but that's not what gets you retired. That's not what keeps you retired and funding your lifestyle. It's the bottom left-hand corner. What's your retirement income? That is the number one question you should be asking your advisor. Not what's my rate of return, but how much income will this portfolio deliver to me throughout my retirement? And so I put it on this financial dashboard. Every time we do a meeting and we update it, you know exactly how much money you're going to have annually to use at retirement. So you can start planning today what that lifestyle is going to look like when you go to retire. And a lot of clients, when I first meet them, they say, we don't know what we're going to do specifically in retirement because we're not sure how much money we're going to have available. Well, I do that right away. It's the first question I get solved right away, so you can start planning today. And of course, I also do other things, like I show you how much money I've made for you. I think it's important just to, the rubber hits the road. How much from a quantitative point of view have I made for you? But there's so many intangible things that I'm doing with my clients that build confidence, lower anxieties. And this document, all my clients love it, and they look forward to having it updated as often as they can get it. Now, use tax-efficient, low-fee investment portfolios with built-in estate planning features to protect your principal, avoiding probate and costly delays. Now, what makes this presentation different? Well, there's nothing for sale here. I'm not asking you to buy a book or to subscribe to some kind of course. I'm just sharing with you the value in working with a business owner specialist as opposed to a generalist. Now, over the next 5 days, I've blocked out my entire week and set aside time to talk with you personally and see if I can help. Here's how the process works. We're going to have a specific and custom-tailored financial strategy session. We'll talk for about 45 minutes and we'll map out an exact action plan and strategy so that you can have confidence in achieving your financial goals. Now, who is this for? Business owners who want to work with an expert advisor specializing in working with business owners. You're serious about achieving your financial goals and you're ready to commit to funding them. You want a customized financial plan and strategy that provides unshakable confidence in knowing you're on track, and you expect unparalleled attention to your business and goals. Now, who is this not for? Young entrepreneurs looking for startup advice. I typically work with people who are 50 years of age and older. Low or unstable cash flow businesses. Business owners who are not ready to take action in achieving their financial goals. Business owners who are not interested in working with an expert advisor specializing in working with business owners. Now, the first step is being certain I can help. And the truth is there are simply some people I can't help. If that's the case, I'll be 100% upfront with you and provide you with recommendations so you can get the help you need. I'm only interested in working with business owners I'm certain I can get results for. This is a confidential one-on-one custom-tailored financial strategy session. We only move forward after all your questions are answered and you're confident we can achieve your goal. This is really a no-lose opportunity for you. There's no cost for our discussion. You walk away with knowing exactly what you need to do to succeed. And here's the next steps. Complete the online information form. Reserve a date and time for our confidential one-on-one financial strategy session. And at the end of our discussion, one of two things will happen. I'll extend an invitation for us to work together because I'm certain I can help you achieve your goals. Or I'll provide direct feedback on what you can do and where to find help. This will likely be the most valuable 30 to 45 minutes you will invest in your business and personal goals this year. Now, word of warning, there are a limited number of new clients I can take on each year, and I only work with clients I'm certain I can achieve results for. Now, here's the time for you to go below this video right now and book your confidential financial strategy session. I want to thank you for taking the time to watch this video, and I look forward to talking with you during your financial strategy session.